Welcome to Crypto Classroom, the #1 YouTube channel for learning about the latest trends in cryptocurrency and blockchain technology. At Crypto Classroom, our main goal is to equip our audience with the knowledge needed to excel in the dynamic and fast-paced cryptocurrency landscape. In today's video, we will be doing a deep dive into ELROND. We will be discussing what makes this project unique, how it works, and evaluating the tokenomics so that we can make a realistic price prediction. Be sure to stick around to the end so you don't miss a thing. Let's get into it. As more and more people use blockchain networks, scaling up to handle the steadily growing amount of transactions continues to be a challenge for crypto projects. Even pioneers like Bitcoin and Ethereum were no exception. This problem, coupled with gas fees, continue to hound investors and traders who are unable to walk away from cryptocurrencies and their blockchains due to their unique advantages. Bitcoin has become the gold standard for digital assets because of its power to store value through scarcity. On the other hand, Ethereum's programmability allows the creation of smart contracts and useful financial applications. So the challenge for developers is finding a solution that blends the best of Bitcoin and Ethereum that can easily scale. ELROND. ELROND is a public blockchain that offers all of the good features of a respectable blockchain that includes two key components: adaptive state sharding and secure proof-of-stake consensus mechanism, which we'll dig deeper later in this video. The ELROND blockchain does not only enable high-speed transactions, it's also a complete Fintech Internet of Things and DeFi ecosystem, which means developers can take advantage of all of these to seamlessly build all kinds of decentralized applications or dApps. ELROND'S developers believe that being able to process a lot of transactions and something called linear scaling should not compromise other important features that a blockchain should have. For other blockchains, speed is usually the feature they sacrifice to bump up other features. With this in mind, ELROND was designed to have the capacity for processing up to 10,000 transactions per second while keeping transaction finality and gas fees at a bare minimum. If you're new to this, it basically means transactions should be confirmed as fast as possible while also keeping it cheap. The developers have also set their sights on doing away with the use of centralized exchanges and trading platforms as the primary means of switching from one blockchain to another. To do so, moving from one blockchain to another means you have to sell your crypto to a centralized exchange like Coinbase, then use the proceeds from the sale to trade or buy another crypto asset which you can then move elsewhere. ELROND is trying to remove this step by using bridges and something called the ELROND virtual machine. Since the ELROND blockchain uses what they call adaptive state sharding and its unique secure proof-of-stake algorithm to achieve scalability, EGLD is the native coin of ELROND network. Let's take a closer look at adaptive state sharding. To achieve scalability, ELROND has taken a different approach to sharding technology, which resulted in a database optimization method that has established itself as one of the leading blockchain-driven solutions. To recap, most blockchains that use sharding simply break up their network into a bunch of different pieces, with each one being essentially mini versions of the whole network. It then checks in with a master shard every now and then, and this is the plan for the coming Ethereum 2.0 upgrade. Actually, adaptive state sharding is very similar to Harmony's effective proof-of-stake, wherein ELROND'S network is broken up into many different shards and each one gets a randomized set of validators to produce each block. Now we're going to get a little technical from this point, but essentially, the network's chronology is organized based on a timeline divided into rounds and epochs. Rounds exist within a specific time frame, and in each one, the network selects a new consensus group for a particular shard, then assigns it to make a new block for that shard, which is again just like a mini blockchain. Epochs can change alongside the network's architecture, which is a fancy way of saying these can be adaptive epochs existing for a fixed time frame. Whenever an epoch expires, it triggers the pruning and reorganization of all the shards. This sharding implementation is driven by ELROND'S desire to achieve some specific objectives. All of what we've just mentioned may sound like a pile of jargon, so here are some of the specific things that ELROND wants to achieve in simple terms. First, ELROND wants to achieve scalability without messing up availability. Basically, whenever there's a fluctuation in the number of existing shards, whether the network is growing or shrinking, there should be no downtime or updates remain unaffected. Second is instant dispatching and traceability, which basically means the network needs to know where everything is on the network at once and be able to calculate future stuff on the network with ease. Finally, ELROND wants to achieve complete adaptability in a way to keep shards balance consistently. We've mentioned earlier about the growing and shrinking of the network, of which it can easily handle well. So it's important for users that Elrond is able to do all of these things. Now let's talk about Elrond's consensus mechanism, which is the system that they use to make sure that everyone agrees on the transactions on the blockchain. Elrond's secure proof-of-stake consensus mechanism is an improvement of the existing proof-of-stake consensus mechanism. The secure proof-of-stake algorithm reduces latency, which makes it faster, and at the beginning of every round, the members of a consensus group are determined by each node in the shard. Again, it sounds technical, but essentially it allows for the reduction of the time for a consensus group election. In other words, the time it takes to select the nodes for a shard takes less than 100 milliseconds. Built into the network is a weighted model of rating to support meritocracy amongst the nodes. It also considers the amount that you have staked. Simply put, the more coins you have and the more truthful that you have been in the past, your vote is valued more. Now let's move on to something exciting called the meta chain. It is a protocol that is driven by a special shard that focuses less on transaction processing and more on accelerating communications between all the shards. Basically, its functions include the creation of new epics, rewarding staker, storing and maintaining the validator's registry, or approving block headers or process shards. In other words, it can be likened to the master shard and in a lot of ways similar to Ethereum's Bitcoin chain. For the final piece of the Elrond architecture, the EGLD tokens. This mainly drives the blockchain by serving as a way to pay for transactions, store validator rewards, DApp development and deployment, and smart contract execution. Unlike other projects or coins, it was created to actually go up against Bitcoin as a store of value. As for the tokenomics of EGLD, it can be a bit confusing. Let us clear it up for you with the basics. Supply is limited and starts at 20 million tokens, with new tokens minted to reward validators, while the total maximum supply of tokens is set at 31.5 million EGLD tokens. This number will technically decrease as the number of processed transactions increase, since a portion of the fees for every transaction are burnt, gone forever. A percentage of every transaction goes to the validators, some go to the Elrond Community Fund, and as mentioned earlier, some are burned. Another neat feature that Elrond has is that if you create a smart contract and a lot of people start to use it, 30% of the transaction fees associated with it go straight to you, the developer, sort of like another form of reward. In terms of tokenomics, EGLD was first released for purchase in a private sale where only 19% of the initial supply was sold. This is remarkably different from how Bitcoin was launched. Elrond has a pre-sale 7.5% of the tokens were made available, while the rest were distributed in increments of 15.4% every quarter over a period of 6 quarters. Now pay close attention, as this next part is sort of like abbreviated and filled with numbers. Back in 2019, Binance held an initial exchange offering for Elrond and sold 25% of the supply almost immediately. The rest of the coins were divided between paying rewards, allocating grants, and marketing the community fund, the founding team, and the advisors. We've checked the whale wallet list, which is a list of the people who hold the most EGLDs, and most of them seem to be big exchanges like Binance or Crypto.com, which is a good sign because it's bad if one person is holding a large amount of EGLD tokens. Also, Elrond is non-inflationary since it does not have a limited supply, which means price and demand positively correlate, so if demand goes up, the price will go up as well. Lastly, let's talk about price prediction. On November 23, 2021, Elrond set an all-time high of $545.64. At the time of this recording, Elrond is currently priced at $182.19, shedding nearly 67% of its value after major market correlations. If Elrond is able to further develop and expand its ecosystem and garner more major partnerships, that it can continue to grow in value. Hence, why we think that Elrond has the potential to reach a price of $1,012 within the next 2 years. That is over 5 times return from its current price. Is this price target too conservative? Does Elrond still have potential? We love to hear your thoughts. Please feel free to drop a comment below. We hope you enjoyed this video. Don't forget to give it a like, hit that subscribe button, and smash that notification bell so that you know when we upload a new one. Until next time, see you in the next video.